Good evening, everybody. This is Thomas Wood, the Director of Trading Operations at ValueCharts.com and also the host of the Value Charts Futures and Forex Live Trading Room. We're going to go ahead and get started tonight with the intro to the VBT, which stands for Volume Breakout Trigger Indicator. Now, before we jump in with anything, we have to go over a really quick risk disclaimer. Trader investing carries a high level of risk and is not suitable for all persons. Before deciding to trade or invest, you should carefully consider your investment objectives, level of experience, and ability to tolerate risk. This content is subject to change at any time without notice and is provided for the sole purpose of education and assistance in making independent investment decisions. ValueCharts.com has taken reasonable measures to ensure the accuracy of the information contained herein. However, ValueCharts.com does not guarantee its accuracy, is not liable for any loss or damage that may result directly or indirectly from such content from an inability to access such information or a delay in or failure of the transmission or the receipt of an instruction or notification in connection therewith. Any past performance results are shown for illustration and example only, are hypothetical and as such have many inherent limitations. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Past performance is not necessarily indicative of future results. And then along those same lines, we're required to show you CFTC Rule 4.41, essentially just saying, obviously, if we're showing you examples from the past, it's hypothetical that that's going to happen again in the future. Now, that being said, we believe it works. We use it every day in the trading room in front of hundreds of traders. So if we didn't think it worked, we wouldn't be here showing it to you. Now, let's go ahead and get started. Jump in with part one, which is intro to the VBT indicator, which is basically just saying, okay, this is what the indicator is, what it's all about. So what is the MQVBT Squeeze? It's a traditional, so if you go back and you look at what a traditional squeeze indicator is, what it's doing is it's watching for a Bollinger Band to close inside of a Keltner channel to signal a squeeze is setting up. What it's looking for is a measure of volatility and market compression, because historically speaking, following a period of compression, normally you will have a period of expansion, which means the market volatility will increase in one direction or the other, and it will give you a good breakout trade setup essentially. Now, again, what would set off the squeeze after the Bollinger Band had closed inside of a Keltner is the breakout of the Bollinger Band from a Keltner channel. That would cause it to quote unquote fire in one direction or the other. What we wanted to do with the MQVBT is we said, all right, that's a pretty nifty way of identifying market volatility. It's a volatility indicator. But we wanted to have a more accurate manner that we could actually measure a squeeze. And we also wanted to have a higher probability of our breakout being a confirmed breakout, meaning it follows through in the direction that it initially breaks out in. So what we did is we came up with a couple of different ideas, and the one that we ended up settling with is what we did with the VBT, which is it's watching both price action and it's watching the Bollinger Band relation to Keltner channel. So it's measuring the spread. Instead of just looking at the Bollinger Band closing inside or outside of the Keltner channel, it's actually measuring the spread or the distance between the Bollinger Band and the Keltner channel, and then watching for it to determine a squeeze when they are very, very close together and the Bollinger Band starts to inch back inside. Then it's going to say, okay, volatility has died down, and as soon as it starts to expand, the histogram bars on the VBT are going to start expanding at the rate at which the Bollinger Band is outpacing the Keltner channel. Now, what this is going to do is when we have a very rapidly expanding market, so a very fast breaking market, it's going to cause the histogram bars to start to show up on the VBT, which means you're going to have a higher probability of a successful breakout. The other thing that we're doing is we're watching the relation of price to the Keltner channel, because we want to say, okay, once price action has come back and closed back inside of a Keltner channel, then that means we've retraced enough that we want to stop calculating this as an expanding market and start saying, okay, it's time to pull it back down. So it has an accelerated step back to zero on the histogram, as opposed to staying out wide and staying fired off in one direction or the other. The other thing we do is it looks at volume as a confirmation tool. So it's looking at the average volume of X number of bars back, and then it's going to look at when we break out, is volume above or below average. So it's calculating whether or not we have a volume confirmed breakout, which will also help increase the probability of having a successful breakout. So it's kind of, we took the squeeze, a traditional squeeze, and we enhanced it. So it's kind of like driving a Ferrari versus driving a Chevrolet, if that makes sense. So what is a VBT squeeze used for? Why do we use this indicator? Well, it's again used to identify consolidation or compression periods where volatility has died down, because typically, historically speaking, after a period of consolidation or market compression, it's like a spring being coiled up and then released, and then it shoots off one direction or the other. So it's telling us, okay, hey, this market's gone into consolidation for a long enough period of time, watch for it to break out. It tells you when a market has a bullish or bearish breakout and whether or not the volume's confirming. So if we are using it as a breakout tool, then we can look for volume confirmation using the average volume of X number of bars back. We can also use it as a tool to tell us when we should start looking for support and resistance lines. So if you're the type of trader that likes trading support and resistance breakouts, what you can use the VBT for is when you start seeing a squeeze, it means, hey, we've gone into consolidation. Now look at the previous pivots and identify those support and resistance levels for the breakout. So it kind of tells you time to start identifying those pivots, those most recent pivots for your breakout trade. Now, how do you read the indicator? Because I've been telling you all about it, but I haven't shown you it. Well, the squeeze has a few different components. All right, a squeeze will start when you look at the indicator. There's going to be a line going through the middle. It's a series of dots, and then there's going to be histogram bars going up and down. All right, the dots in the middle are our signal dots. If we have a yellow dot, that means the squeeze has started. A bright yellow dot means we have below average volume, so we have a squeeze with below average volume. If we have a dark yellow dot, that means we have above average volume for the squeeze. Green histogram bars, so if it fires off bullish, and we have green histogram bars, is saying a up bullish expansion of Bollinger Band in relation to Keltner channel. If we have red histogram bars, signaling a downtrend and saying bearish expansion. A dark blue signal dot is a volume confirmed breakout. So it means we're not in a squeeze, we're breaking out of the squeeze. And if it's dark blue, then that means it is a volume confirmed breakout. A light blue dot means it is a breakout, but there's not volume confirmation. So it's still breaking out. The signal has gone out of a squeeze, but we do not have the confirmed volume confirmation on that breakout. So this is what it looks like. This is crude oil on a 2-minute chart, and this is a squeeze pattern. So again, we have these light yellow dots, or these yellow dots down here signaling squeeze. Again, this is crude oil. This is on a 2-minute chart. All right, so we go into the squeeze. You see how the market has gone into a coiling pattern. We've gone to compression. As of right here, which is this bar right here, we break out of the compression. The squeeze fires off dark blue dot, which means this is an above average breakout, and then we continue to sell off to the downside. The histogram bars are telling us bearish confirmation, bearish confirmation, bearish confirmation. As long as we are accelerating lower, that means the expansion, the distance between the Keltner and the Bollinger Band is becoming greater and greater, which means the market is quickly accelerating in your direction, which gives you additional confirmation to stay in the trade. Then we start getting the dark red histogram bars, which means we started to go back into a consolidation period. We go back up, we hit a new squeeze right here. It fires off on the very next bar right here for a short, moves down once again, goes back into consolidation, sets up a new squeeze pattern here. Okay, so again, the way you read it, a yellow dot means squeeze is setting up. A light yellow dot means we are in a squeeze, so we are in compression with below average volume. Dark yellow dot means we are in compression with above average volume. And by the way, somebody's going to ask this, I'm sure. Yes, you can change the colors of everything on here. For those of you that are colorblind and want to have more contrasts, you can absolutely change the colors. Dark blue dot means we exited the squeeze, so it expanded out of the squeeze, no longer consolidation, no longer in compression. Dark blue means volume confirmed, so we have above average volume on the breakout. Red histogram bars show accelerating distance between Keltner and Bollinger Band. Dark red bars mean the distance is getting narrower. If the price action closes back inside of a Keltner channel, then this will accelerate back to zero much quicker. Okay, so how do you read the VBT squeeze? Back to this. You can still use this. I'm sitting here talking about volume a lot. Now, I trade Forex all the time. As you know, there's no volume in Forex. You cannot measure Forex because it's not a centralized market. So it's all over the world through many different clearing firms, and it's not centralized, so we cannot calculate volume. You can still use the squeeze, just don't use the volume component of squeeze. So you're not going to have the color changes signaling above and below average volume because there's no volume measurement. But you can still use it for market compression. So here's an example. This is the dollar yen. This is the dollar yen on a daily price chart. Right here, you can see all the dots are the same color. Okay, they're all yellow and they're all light blue. So we go into compression. Market is setting up the squeeze, consolidation, consolidation, consolidation. And then we break out, go from a yellow dot to a blue dot, signaling there's your breakout, and a green histogram. And we have accelerating histograms all the way up until we top out right here. And then our histograms stop accelerating, which means you can be closing the trade because you no longer have a very fast moving market if you're trading the momentum. But you see exactly how that worked. We broke out of the consolidation here. Squeeze fires off to the upside, rallies up very nicely. And then again, once Keltner and Bollinger Band stopped expanding, it starts going back down to zero. So any questions about how you read the indicator before we start talking about how you use it to actually trade? All right. Yeah, the dark yellow dot is above average volume. So what is the dot colors? What are the dot colors again? Dark yellow is above average volume in a squeeze. That means there's a lot of trading going on, but the market's not moving. A lot of times you'll have dark or a lot of trading right before the big breakout occurs. So if you have a dark yellow squeeze or above average volume squeeze, that's not necessarily a bad thing. That can be a good thing, telling us that the market is getting ready to really rip one direction or the other. Yes, Tammy, you absolutely can. Do you enter when it's still yellow or when it's turning blue? Tom, we're going to answer that question here in just a minute. The dark blue dot means squeeze is fired off with above average volume. So you have volume confirmed breakout. Light blue dot would mean a breakout without volume confirmation. Okay? No, it's completely different than a regular squeeze. Send me an email, Randy. I'll send you what the difference is between a squeeze and the VBT. Alrighty, so let's go ahead and start talking about trading, actually trade setups that you can use with the VBT squeeze. So because many times a significant increase in volatility, as we mentioned before, follows a time of market compression, one of my favorite ways to trade the squeeze is using it to tell me when it's time to draw your support and resistance, like I mentioned earlier, and then treat it like a breakout trade and use the squeeze to confirm the volume. If you're doing it this way, if you're drawing your support and resistance levels before the squeeze actually fires off, a lot of times you can get in earlier, so you'll have a better entry. Now, the one problem with this is you'll have a lower success rate, okay? So you'll have a higher probability of a false breakout. However, you'll have a better fill on your winning trades. One of the advantages of trading the breakout instead of the signal bar is that we can oftentimes get a better price right as the move actually starts, as opposed to getting in after it has already initiated the move. So, what do I mean by this? This is crude oil on a 60-minute chart. By the way, I'm trying to show you a lot of different time frames. You can look for a consolidation, a period of compression, a squeeze on any different time frame you want. My favorite are a 5-minute chart and a 30-minute chart. But all you have to do is, if you are a longer term trader, you're looking for bigger moves, look for a larger time frame. If you want to if you're a day trader, look at a shorter time frame. All right. So here's a crude oil chart on a 60-minute basis. So on a 60-minute chart, Here is our compression. You see we have a yellow dot right here signaling squeeze has started. Okay, that means it's been in this compression zone for long enough that it's time for it to break out. We draw our support and resistance. Resistance is going to be the previous pivot high. Support is going to be the previous pivot low. Okay, we can enter as soon as we break through the support. So we can sell right here as soon as we break through that support. Then the squeeze fires off right here. So your squeeze didn't actually shoot off until right over here when your histogram started to increase. Okay, then we confirm the very next bar. Oh, excuse me. This is when it started to fire off, was right here. On this first one, our histogram started to expand, which means the distance between Bollinger Band and Keltner channel has expanded. Then you see we have accelerating distance between Bollinger and Keltner. Accelerating, accelerating, accelerating. As soon as the distance between the two stops accelerating, we start decelerating and going to consolidation. Now it stays bearish this entire time. You see this whole period here where we had the counter move, the bounce against the down move, we had below average volume. Okay, so the entire up move against the overall downtrend essentially was counter or was below average volume, which means the buyers that were coming in there and pushing prices up, there were not as many of them there as there are sellers that had been pushing prices down. Then you see when we start to break down once again, look at our volume confirmation. Volume starts increasing above average on the entire down move, which tells us there's a lot more sellers coming in than there are buyers holding it up. Okay. Here's another example. This is 30-year bonds. This is 30-year bonds on a 5-minute chart. Here's our squeeze. You see the yellow dots at the bottom saying squeeze has started. So what do? Draw our support and resistance. Support, resistance, watch for our breakout. Here's our breakout for our long entry. Here's where the squeeze fires off, or this is where our long entry would be. Here's where the squeeze actually fires off. You get in a little bit earlier, then you can see the expansion between Bollinger Band and Keltner. Market is rallying, compression, goes back into consolidation. Again, look at this, our down move. So when the market was expanding higher, when we were accelerating, climbing, we had above average volume. On the retracement, what do we have? Below average volume. And then what do we have when we start to rally again? Above average volume. So again, it's telling us market has more buyers than sellers because the downswings have much less strength, much less volume coming in than the upswings have. Yes, you can, I believe, Dan, make them larger. So if you want to be a little bit more aggressive with your trade entries, one of the things you can do is use a trend line as opposed to a support or resistance level. So with those two examples earlier, we were looking at just the previous pivot high and low for support and resistance, and we're looking for the breakout. If you're using a trend line, then we're looking for something like this. We'll be drawing a trend line connecting two pivots. And when we come down, now the difference is we'd be selling up here as opposed to our entry on the previous pivot low. So we have this much more profit on our winning trades. However, again, it's a little bit more aggressive because there's a slightly higher chance of a false breakout because we have not officially broken through the pivot support. Okay. So here's an example. This is the S&P. This is on a 5-minute chart. By the way, this strategy worked amazingly well today. I'll show you some examples of that. S&P on a 5-minute chart. We have yellow dots, so what do? We connect trend line connecting two pivots. Whenever you're drawing a trend line, make sure you're connecting pivot points. We're not just connecting one bar to another. We are connecting pivots. So here's pivot 1, here's pivot 2. Here's our break of the pivot for our sell. Then again, yellow dot signaling that we have squeeze setting up. So what do? We connect a pivot. Here's pivot 1. Here's pivot 2. Here's our entry for the long. Here's a rally. Now again, the squeeze would have gotten you long on the very next bar. The squeeze fired off right there. But we get in a little bit earlier at a better fill because we're getting in on the trend line break as opposed to the squeeze itself. Here's another squeeze. Yellow dots saying, hey, market's gone into compression. Draw your trend lines. Here's our pivots. Okay, so what do? We connect the pivots with trend lines. Puts us in a pennant pattern. We break out of the pennant for the short. And what happens? Market follows through very nicely. Okay, again, when you are drawing trend lines, you're connecting pivot points. A pivot point is when the market has gone to a certain point and then turned back away from it. You see? So those are pivots. Alrighty, here's another example. This is bonds. $30-year bond on a daily price chart. Right up here. As of this point right here, this red, this white arrow says we are entering into a squeeze. So market has been compressed. Now we're looking for it to get ready to break out and accelerate in one direction or the other. So what do? We draw our trend lines connecting pivots. Here's pivot 1, here's pivot 2. You could also have drawn a trend line going across your highs, put it in a pennant pattern. Here's your breakout for your short entry. We dropped, retested, and then sold off through the floor. Your squeeze did not fire off until this price bar. So you got in about 2 points earlier, which is about $2,000 a contract sooner than you otherwise would have. And then once again, as of this white arrow here, we go back into a squeeze. What do? Draw our trend line connecting our pivots. Here's our trend line break for our short. And we move down once again. Now, this breakout was not confirmed on the squeeze when the squeeze actually fired off. So by the time the squeeze actually fired off, volume had dried up. However, because we have the darker dot on the squeeze, we have above average volume confirming the breakout when we actually broke the trend line. Okay. And then this is another one. Once again, we go into a squeeze pattern. Draw your trend line here. You broke the squeeze on the day that was forming when I took this picture. And actually, if you look at the price chart, the next day, this jumped all the way up here like this. So it worked out really nicely. Came all the way up, I believe, and retested that high, or just about did. So it worked out really well. Alrighty. Lastly, let's talk about one more way of trading the squeeze. Then we're going to pull up some live charts. I'll look at any market you want to see, and you can see it looking live so that I'm not sitting here just cherry picking examples for you. Another way of using the VBT, and this is actually one of the ways one of our members really loves using this. She actually told me she was going to adopt me because this was so wonderful. And this is by having a directional bias using a trend indicator as a filter. One of the ways that I do this, one of the indicators I use for a trend filter is the Momentum Trender Pro. So I identify a trend and then wait for a squeeze setup to filter my entry into the trend. Meaning, what we're doing is we're waiting to determine market direction, then waiting for the compression, and then jumping in as soon as we break out of compression in the direction of the trend. By having a trend filter, we're decreasing the probabilities of a false breakout and making sure we're on the right side of the market, so we're not going against the overall direction of the market, and it's also increasing our probabilities of success. We can also use the Trender as a tool to help us determine exits. That's one of the reasons I like the Trender Pro, because we can use a yellow price bar, which is using breakout logic, to determine an exit point, or a potential exit point. Here's an example from earlier today. If you were in the trading room, you know I was buying crude right here. Okay, now what happened? This is a 5-minute crude oil chart. This is crude. We have our yellow dots saying market compression. Okay, so we are inside a squeeze, market has compressed, volatility is down, we're waiting on the breakout. So what do? Draw our support and resistance levels. The way the Trender Pro works is green price bars mean bullish, blue price bars mean neutral, red price bars mean bearish. Okay, so we go into compression and we're green. We have a bullish momentum trend, so we have a bullish bias on the breakout. We break out with above average volume, okay, because of the dark yellow dot right here. Then squeeze fires off a couple bars later, right over here. and it stays bullish all the way up. And then it ended up running into resistance all the way up here at the highs. Now, granted, I was not staying in for the entire up move. I got out right up here. This was my entry. This was my exit. That being said, many of the traders in the trading room did stay in because they're using different exit logic. Now, if you're using the Trender Pro as your exit, where would the exit have been? Right here, the yellow price bar. You would have trailed your stop just below that, and that would have gotten you out. Okay? No, Radha, I'm not. I'm just not answering questions at the moment. I'll do questions in a minute. This is the S&P. There's another example. This is today. So if you had been trading with the VBT today, using this same strategy, you would have done extremely well. This is S&P, 5-minute chart. Here's our squeeze. Okay, as of this point here, we're in a squeeze. That is this price bar right up here, right up there. We go into consolidation. So volatility is down. We have entered a squeeze. What do? Draw our trend line for our support. We have a bearish directional bias because we have red momentum trender. Here's our sell entry on the break of support, confirmed by the red trender. Here's our exit. And then what happens? Once again, we go into a squeeze. Yellow bar, which is as of this price bar right here. We're now in a squeeze. Draw our trend line. Again, still have bearish directional bias. Here's the break. Here's your sell. And we sold off once again. Trail your stop just above this high. You would have still been in it when it was coming down. Okay? Makes sense? This is one of my favorite ways of using a squeeze, is using it with a directional bias. And if you come into the trading room and you look at my 5-minute chart that I have the squeeze on, I actually have the trender on here just like this. So what are we doing for you tonight? Well, we are offering the squeeze, but not only that, Dave and I are also putting together an entire workshop coming up on July 30th on trading the squeeze. So you're going to have an entire trading workshop on how to enter, how to exit, where stops go, etc. Different trading strategies using the squeeze. You'll get the squeeze indicator itself. It's all for $497. You can get it by going to valuecharts.com/July. If you need help with anything, you can send an email, support@valuecharts.com. Again, the link to get the indicator itself is valuecharts.com/July. Now, who is the VBT squeeze for? So who's this indicator for? Well, if you're the type of trader that wants to be able to make your own decision when trading, then this is a good indicator for you. It's going to help you identify the setup, but it's not going to say, jump in right now. It's going to say, hey, here's a setup. Now it's up to you to place a trade. It's good for self-starters that are disciplined and can follow a rule set. One of the things that actually surprises me all the time is I go and meet with traders and I say, okay, why did you place this trade? And they don't know why they placed a trade. So if you're not disciplined enough to actually follow a rule set and place trades according to a system, then it's not going to help you. It's also good for traders that are looking for an indicator that help them identify potential entry points for trade initiation. So if you're saying, all right, I understand how to determine the trend of a market, I understand where a market's going, but I don't know when it's time to actually get in. Well, this is going to help you by telling you, hey, here's the compression, watch for the breakout. It's also good for traders looking for a way to use volume and volatility compression to enhance their trading strategies. Now, who is this not for? Because it's not for everybody. It's not for traders looking for the Holy Grail. All right, it's not the Holy Grail of trading indicators. I don't believe there is one. So if you're that type of person that goes, I just want the one indicator that's going to do everything. Well, I'm sorry, this is probably not for you. It's not for traders that cannot be patient and disciplined in their trading approach. So if you're the type of person that cannot be patient and wait for the setup to occur, wait for the squeeze to set up and then jump in when it's time, as opposed to just jumping in arbitrarily, then this is not for you either. It's not for traders that are looking for someone to tell them exactly what to do and when to do it. It's not for traders that are unable to make your own trading decisions. Now, what platforms is this on? This is on TradeStation. It's on TradeStation, NinjaTrader, Thinkorswim, which is Toss, Sierra Charts, which is Infinity, eSignal, and MultiCharts. Okay, so TradeStation, NinjaTrader, Thinkorswim, Sierra Charts, eSignal, and MultiCharts. Again, you can get it, and you have a 30-day money-back guarantee. So if for any reason whatsoever you get the indicator, and within 30 days you go, you know what, I don't like this at all. Or you go, you know what, I love the indicator, but I really don't like value charts. And that's fine. We'll give you your money back. All you have to do is send us an email and say, hey, look, I don't want the indicator anymore. We'll log onto your computer, take it off your computer, refund you 100% of your money. No questions asked. Okay, 30-day money back guarantee. Again, you can get it. Go to valuecharts.com/July. The workshop is on July 30th. Everybody that's purchased the indicator should be getting a link over the next couple of days. Again, valuecharts.com/July. You should be getting that link for the workshop in the next couple of days. It's not on MetaTrader 4. No, not at the moment. Yep, it's a one-time price. No monthly fee. One-time price. Yeah, Kathy, absolutely. If you purchased VBT last week, you're going to get a link for the workshop. All right, let's go ahead and take a look at some live charts at some squeezes and setups that have happened today. So what markets do you want to see? This is crude oil, by the way. This was that crude oil setup this morning, right at 8 a.m. Get into the trading room at 8 a.m. Here's the compression. Here's the breakout. Here's the follow through. We ended up pulling back, entering into a new squeeze, then selling off from there, and then bounced, went into a new squeeze, and then sold off from the last squeeze that we just had going into the close. So it worked out fairly well. Send an email to support@valuecharts.com, Kathy. Yes. Can it work on tick charts? Absolutely. So we could look at, what market you want to look at? Let's look at bonds, 250 tick. Here's a 250 tick chart in bonds. Okay. And by the way, I have the Trender Pro up here as well, giving us the directional bias filter. So for example, here, you go into consolidation, we have the squeeze, but we have a bullish directional bias because we are in a bullish trend. So even though we broke through support here, you don't take a short. You wait until you go into the next squeeze. Here's the resistance. There's the break of the resistance. Here's your rally. Go into another squeeze. You broke out. Now this one would have been a little bit tricky because it did break down a little bit, changed to red, but then went back into a new squeeze and broke out to the upside. No, it does not work on Renko and range bars. It has to have volatility. What about GoPro? Sure, let's look at GoPro. Here is GoPro. Look at that, 5-minute chart, worked perfectly. Trender Pro combined with it worked really, really well. Bullish directional bias because you have bullish momentum trend. Here's your squeeze. What do? Draw your resistance. There's your break of resistance, and you have the dark blue dot confirming that it's a bullish breakout with momentum or with volume confirmation. What happened to GoPro? Rallied up right into the close. Yes, the workshop is definitely going to be recorded and you will get access to it afterwards. Take a look at Facebook. Facebook was in a squeeze this morning, broke out to the downside. Didn't really follow through all that much, would have been about a break-even trade. Yesterday worked out really well. But if you've been in the futures trading room, we talked about this in our equities outlook at 9:15, that this was bullish, very bullish on the daily. Worked really, really well on the daily basis. Look at this. Here's your squeeze. Look at that. There's your breakout. Look at your volume confirmation on the breakout. Rallied up, pulled back, went into consolidation again, broke out. And if you were in the trading room, we were saying it was a buy Monday of last week, actually. So where was Monday of last week? I think it was right here. Yep. Monday of last week, we said it was a buy because we broke through the resistance. Worked out really well. No, it does not. The 497 price does not include the Trender Pro. It's just the VBT. What about gold? Here's gold. Look at that. I mean, that's a moneymaker. Here's your consolidation, your compression. Squeeze is setting up. Here's your breakout. Squeeze fires off with above average volume to confirm the breakout. What color is the Trender as well? Trender is red, confirming it's a bearish breakout. What happened to gold? It fell through the floor. Worked out perfectly, just like it was supposed to. Larry, send me an email. What about Google? Here's Google. Here's your squeeze, your compression. If you drew your support resistance, actually, if you were in the trading room, we said this was a buy the day that it broke above that resistance right there. That was that Monday as well. It broke through the resistance. We said it was in compression, in consolidation, watching for the breakout. There's a breakout to the upside. What color is the trender? Trender is green, confirming it's a bullish breakout. Squeeze fires off as well, with dark blue dot confirming it's above average volume. And Google just took off, and after earnings, it jumped even more. What about soybeans? Soybeans. So here's soybeans. You went into a squeeze right over here on your dailies. So what does that mean? Draw support resistance. Your resistance would have been right there. There's your break of resistance with a dark yellow dot confirming breakout, confirming volume. Here's a dark blue dot when it fires off and then follows through all the way up. That worked out really well. Trender again was green as well on that breakout. Send an email to support@valuecharts.com, Jer. Again, if you want the Trender Pro, send an email to support@valuecharts.com. We'd be happy to help you get the Trender Pro as well. The price tonight for the VBT is $497. You can get that by going to valuecharts.com/July. You'll also get access to the July 30th workshop. That's coming up next week. Again, it's $497. You're getting the workshop for free. You're getting the indicator. It is on TradeStation, NinjaTrader, Thinkorswim, Sierra Infinity, eSignal, Multicharts. Also, you have a 30-day money-back guarantee. So if anytime within 30 days, you say, look, I don't like you, I don't like your indicator, or whatever it may be, we'll give you your money back. No questions asked. We'll take it off your computer and you can go on your way. We don't want you to have it if you don't want to use it. What about the euro on a 1-minute chart? Well, this is 1 minute is really short time frame. Use a 5-minute chart or a 3-minute chart or 2-minute chart. Here's your 5-minute euro. Squeeze, 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 fire off to the upside. Squeeze, 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 fire off to the upside. Continues to go higher, higher, higher. You had a squeeze right here and then fired off to the downside and sold off going to the close. Yeah, Tammy, I am every single day. What's the difference between the Trender Pro and the VBT Squeeze? The Trender Pro is coloring your price bars, telling you a momentum trend. The VBT Squeeze is identifying compression periods for a rapid expansion breakout. About 30-year bond on a daily. Again, if I'm missing your question, I apologize. It's just because I've been, there's a lot of people in here and there's a lot of questions coming through. Here's 30-year bonds on daily. This was that trend line I had drawn the other day, or on that chart you saw earlier. Here's the breakout to the upside, and I said jumped up, almost hit this high, just about did, and then pulled back. Can I look at the loonie on what time frame? This is Canadian dollar. Look at this. You had a squeeze right here. There was your squeeze, and then fired off right there, and it's just been tanking ever since. But if you had been in the trading room, you would have known that, because of this trend line that we said if it breaks the trend line, it's going to go lower. And what happened? It broke the trend line and it went lower. Bob, depends on your platform, depends on your settings. What about a 30-minute chart? Here's a 30-minute Canadian dollar. You're in a squeeze right now. So what does that mean? That means you draw resistance, you draw support, you watch for a breakout. It depends, Skip. You can use a 2 or a 5-minute. It's up to you. You'll have more setups if you're using a 2-minute chart, but you'll also have more false signals if you're using a 2-minute chart. Yeah, nothing's perfect. Can I show gold? Here's gold. Gold was in a squeeze earlier today. What did I say in the trading room, by the way? Going to the close of the trading room at 12 o'clock Eastern. Watch for gold to sell off going into the close. And what happened to gold? That was right over here. There's your 12 o'clock price bar. What happens to gold? It sold off going into the close, just like it was supposed to. You had a squeeze. It broke out of the trend line. Squeeze fires off. You sold off, just like it was supposed to. And what happened right before this major drop we had on Sunday night during the Asian session? Squeeze, squeeze, squeeze. Fires off to the downside, and gold tanked. Tanked up to the floor. What about some Forex pairs? Here's a euro dollar. You see how your squeeze, it just changes to the 2 default colors, yellow and light blue, instead of having your 4 colors with the volume confirmation. So here's a squeeze on a 30-minute chart. We were in a squeeze this morning, squeeze, 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 fired off to the upside. And what happened to the euro? It jumped way up, just like it was supposed to. Aussie Kiwi. Let's take a look. Here's Aussie Kiwi. Squeeze, squeeze, squeeze. Fires off to the downside. Took a nosedive. Squeeze again. Fires off to the downside. Take a nosedive. Squeeze this morning. Broke out to the upside. And then now we're in a squeeze again right now. Waiting on a breakout. Kathy, I think we're working on a way. To get the squeeze onto a scanner. It does not have scanning capabilities right now. Can I look at Apple? Sure. Last couple of markets, Apple, this is a 2-minute chart. Here you go. You had a squeeze, fired off to the downside, sold off a little bit. Apple has still been negative here on your squeeze. Squeeze is still bearish. Where do you get the Trender Pro? You get it from us. Send an email to support@valuecharts.com. It's another indicator that I developed for us to use. Did gold tank because of news? I don't know why gold tanked other than the reason I thought it should tank, which was the weekly basis. Go back and, if you remember, go back and watch the weekly outlook from a couple weeks ago. And we said, this right here, this is what we've been watching in gold. And we said, as soon as we break through 1134, gold should drop again, and that the next support was not until way down here. So you're looking at 1,000, potentially another $100 an ounce to go. You were in a squeeze, you broke out of the consolidation period to the downside. Squeeze is just firing off on the weeklies. Yeah, China sold 2 tons of gold. That's correct. I actually remember reading a article about that yesterday. Yes, Bob, absolutely. You can combine this with momentum, and you can have momentum and squeeze breakout. So you can have momentum confirmation on a consolidation. If you look at my charts. So these are my charts here. Okay, I always have momentum. Always have momentum. Look at my 30-minute chart here. I have my squeeze and my momentum. Alrighty. Again, you can get the indicator. Go to valuecharts.com/July. I hope everyone had a good time here tonight. Hopefully you learned something. Radha, I can't tell you when a good point is to short gold because I don't know what gold's going to do. Right now, there's not a setup to get in it. Earlier today, there was a short entry in gold, but not anymore. So again, hope you enjoyed it. You can get the squeeze indicator, valuecharts.com/July. The workshop is July 30th. It is being recorded. You'll get access to it. If you cannot attend on July 30th, that's fine. You'll get access to the recording. Again, you have a 30-day money-back guarantee. It's available on TradeStation, NinjaTrader, Thinkorswim, Sierra Charts, eSignal, and MultiCharts. Again, my name is Thomas Wood. I hope you guys enjoyed it. And until next time, happy trading.